Hey, what's going on, guys? Just want to do a 1 year update really for myself. For anyone who watches this, thank you for watching. This is my 1 year returns, 62% year over year. So you can see here, I have 1 year, I have $130,000 in gains. And then you can see here in IBKR, I have another $9,700 here in 1 year gains. So if you add those together, that's how you get the $140,000 here. And then if you take those two positions together and subtract out the gains, you get the original starting capital, which is 225,000, and that's how you get 62% year over year. Now, this 62% is extremely volatile. I I literally a month ago here, you can see I have had $100,000 swing in my portfolio in that time. Especially from here, like April 8th, from 192 up to here. So where this will be in 1 to 2, 3 months, I have no idea, but I do think in the long run, I will do overall. I will do well. Um, I think I'll be okay. But from here, I was probably like 20% year over year or something. Maybe even less. And then I went from like you can see this actually says 12% year over year, and then my portfolio has just gone parabolic since the tariffs ended. So I guess what I'm saying is 62% is great. I have no idea what it will be in a few months. My original goal is not to lose capital, and then my secondary goal was to get 15% return. So was doing real estate. I sold my real estate, moved to stocks, and then I recently, when I started investing in stocks, it just made sense to me. I had to do a little bit of homework for like a month or so to be able to read balance sheets and to understand a lot of like the nomenclature that's in the stock world. But in general, once you understand business, you will pick up and understand the fundamentals of now analyzing like any company pretty quickly. So that's kind of why I think I've been able to do so well. Is I just actually have a pretty good background to begin with. I've worked at many startups, and then I've run my own kind of startup and stuff like that. So I have like a reasonably solid background before I even got into investing. I don't think 62% is sustainable at all. I don't think it's a reasonable return at all, and I don't think I will ever get 62% again. I think 15-20% long term would be very good returns. So I guess with that, I just look at my portfolio today, just give a few comments about it, and then yeah, I guess that'll be the video. So I've done super well in Sezzle. I talked about Sezzle on my channel. It's now my largest position. My plan with Sezzle is I still think it's cheap here. I don't think it's properly priced relative to what the business is going to be doing. They're trading at, with guidance, their forward earnings is less than 30 still, and I think this is a more appropriate multiple what the business is doing, but they just posted another quarter of 100% year over year growth, which is insane. And for Q3, or Q2 is going to be 100% year over year as well. So I don't know, but we could have another crazy year with Sezzle, and I just want to see what happens. I think I've decided more and more that I'm just going to let my best winners win. I'm not going to trim them. I'm not going to sell. I'm just going to hang tight. And I think what will happen is I will probably hang tight and I will probably lose something. But I think in general, I'll actually do better. I think companies that tend to outperform to the upside will continue to outperform the upside. In all my positions, I'm still very bullish on. So I just think it's a mistake to start selling Sezzle early. Even if Sezzle like at 40 times earnings, I'm like, what is a reasonable long-term growth rate for this business? I mean, if they do like 30% annually, which is very impressive, by the way, the business will still double like every 2.5 years from now. So even now at 37 times earnings without crazy growth, I just don't see how it's not still cheap. And this is one of those positions where it could be like a 10 bagger. I literally might have hit a 10 bagger and will have to hang on to find out. So my investment philosophy these days is buy and commit, see it through the end. I think by doing that in the long run, I will do well. I might change my tune to that in a few years, but for now, I'm committing to Sezzle and HIMS and Hood are probably my most volatile positions. And then as well as Giga Technology, I'm mostly committed to, which I'll talk about a little bit later as well. I have a large realized gain on HIMS already. So my original cost basis on this was $17. I sold at 37 back before Q1 or Q4 earnings, and then I bought back in after Q4 earnings when they gave really strong guidance for the year, and then I literally averaged it all the way down from $40 to $34. So my gain on this is actually technically my largest winning position is HIMS, but I realized some of that, so it's not shown here. Um, With Hims, I think it's a great company. I think they're having amazing growth. They're going to have another amazing year. I think the CEO is fantastic, and I think there's huge opportunity within healthcare. So I'm pretty excited to kind of just see how Hims develops over the following year. Originally, when I was buying Hims, it was like crazy. I was like, okay, this is trading at 50 times earning and 4 times earning to 30, and they're going to go 40% annually, and they've been growing 40% annually for years now. So that was like the investment thesis. Um, with Hood, the reason why I have Hood is their gold subscribers. It's like a Costco-like subscription service, and it's kind of a no-brainer. I think Hood has been really good at driving assets onto their platform. They've been really good at monetizing those assets, and I think their biggest opportunity is within crypto. I don't think people realize how big crypto trading can be, and I think crypto trading has potential to be bigger than stocks. And the reason why is you can trade 24/7, 7 days a week. Crypto is very volatile, which is much better for trading. It's much better for trading. A lot of people think crypto is only good in a bull market, but there's actually parts of crypto that are actually very strong in a bear market. With the right regulation, we'll see if those will come to the U.S. markets. These are the parts of the market like perpetuals, event contracts that are kind of becoming legalized. That kind of stuff is still great in a bear market because the economy doesn't affect those. Melly and BN are my two kind of core long-term holdings that I will never sell. Melly is this long-term compounder in LatAm. Their fintech business is growing crazy, and they're also doing very well in retail. I think Melly is still cheap here, and I think Melly also has potential to be like a very long-term, 15-year kind of 10-bagger. But I will hold this company probably forever. Brookfield is basically a Berkshire Hathaway, and they basically are using annuities, which is kind of like an insurance asset, to invest in private equity type products, and that's grown like 2x over the last couple of years. So I think their Brookfield play will do their Berkshire play will do very well. Palomar is just like insurance startup. They're a very young company. They used to do earthquake insurance, inland marine. They've been expanding to crop. Basically, Palomar is just very good at growing in insurance. That's it. That's the TLDR. And I thought they were not trading at a reasonable multiple relative to what the business was doing. So Palomar is actually one of the most expensive insurance companies that's publicly traded right now. But despite that, I'm just gonna let my winners run. It's still trading at a forward earnings of 20. So I bought here. And what's interesting is I actually bought like literally at all-time highs. Like I bought like right here. And it's easy now. You're like, oh, like it went up. But when I was buying, the graph literally looked like this. So it was not the highs, but it was definitely like some of the most recent highs that the business had. And when I was looking at Palomar, the main thing I noticed was basically just this growth and also this net income growth. So yeah, that's how I ended up in this insurance company. Gonna keep holding. Still think it's a reasonable hold, and I guess we'll see how they do. VersaBank is something I round tripped on. This company literally went from $9. I literally got like 100% return, and then it went back. So I bought here in the nines. I held it, ran up, again 90%, and then it's ran all the way back down. But I guess I don't really feel like going too much into how this business works. The TLDR there is they literally don't take losses on their loans, and you can see it in their loan loss provisions. So you have 102 million in interest income, and your loan loss provision is 268,000. It's basically nothing. So they are taking their business model from Canada to the United States. So I think it'll be very interesting to see if they what happens this year. So if they're a $500 million Canadian bank, then theoretically the United States is 10x the size of Canada, so they could potentially 10x. If they do not deliver, and I don't see like any movement in the next year, for this time next year, I will sell this position and just move on. But I want to see their American expansion play out, and it should be interesting. Giga Cloud Technology, man. My read on this company was 150% correct. You can actually see here they announced their share purchase program. And for anyone who doesn't know, my thesis on Giga Cloud Technology was the negative sentiment in the business will change. The short reports are wrong, and they will buy back the company in the meantime. And at the time, I was buying around here, like $20 a share. And then I have rode it all the way down to a near 50% loss at the worst. Kind of recovered here. I'm down, like $5,000-6,000 total in this position right now, and I don't know what I want to do with it because I don't, originally it was just 20% additional tariffs in China, and I was like, it's not going to matter. But then Trump went nuclear, which I didn't think he'd actually do. And now I'm like, I don't know if I want to deal with the drama of tariffs. But Giga technology has little 2x potential. It could easily be 2 or 3x from here. And I just want to point out, as someone who's had 300% returns in the last year, I've had almost a fourth one here, and then I had one here that I gained and I lost, whatever. I feel like I am qualified to find these positions. Like, I clearly am good at it, at least this year. Maybe it won't return. And it's like with this company, I know there's a ton of negative sentiment, but like when you look at their KPIs, they're so strong. It's like we can see that every metric is just green to the left, right? So I still think there's a lot of potential for this company. I don't think AI technology is like an amazing business, but I think they're actually a pretty solid business. And I think their CEO has done a good job of finding opportunity to grow. So I don't know. I think I'm going to see this one out. Here's what I will say. If tariffs end up being a problem and end up not being favorable and I take a loss, so be it. I think that's just the reality of investing, and my style of investing is I'll get these big wins and occasionally I'll take these big losses. So hopefully GigaCloud Technology is not one of those, but given my returns in the last year, I can afford to take that risk. I'll just touch on my last two positions here quickly. Bank of Georgia is a very interesting company where they're basically the Georgian economy is growing very quickly because of the war in Ukraine and Russia. And because of that, this bank was trading at like 3 times earnings or something like that. I originally was buying somewhere around here in this area, and then I've been kind of riding it up ever since, and they've done very well. Obviously you can see in the last month here. God, I didn't even realize how much I made in the last month. I really don't check this position that much, to be honest. And that's because I know like I'm getting a dividend and they're buying back shares and they're doing 15% annual growth. So like I was like, why do I need to pay attention? As long as Russia doesn't invade, they'll do well. Forex earnings, they're probably still cheap, to be honest. Given they have 15% annual growth, like they'll double, right, in the next 5 years. And then that means if stock doesn't move, they'll be at 2x earnings. So make of that what you will. At one point in time, not anymore, but they were one of the cheapest companies in the world, like genuinely top 10 that I knew of, a price relative to what the business was actually doing. So yeah, definitely an interesting company. And then my last position is in GoEasy. They're a subprime lender in Canada. They just had a bad earnings report, and that's why it sold off. That's why I'm down 10% of this position. But what I like about this company, we were trading at 9 times earnings, forward earnings of 7, and they historically have grown very, very well. So we look here, and we can see they've grown revenue every single year, guys, for literally like 20 years. And they've been profitable the entire time. Look, we can see this net income line. So in 2022, profit dropped, and there's a good chance profit will drop potentially this year because Canada's entering a recession. What I will do with this position is if it drops, I will just add more, because eventually what you see is they always recover. They come out strong on the other side. So what we'll see eventually is this explosion in earnings, and the company will get re-rated appropriately, and I don't know, I'll do well there. That's just my opinion, so we'll see. They've kind of had a nice run up here back in 2023 from 2020 to 2022, so my guess is we'll kind of repeat that, and then it will flip to the upside. I will take my 40-50% gain, and then I'll decide what to do then. So yeah, those are all my positions. Summary, 62% returns. Don't think those returns will necessarily stick. Would love to do 15 to 20% annually. And that's it. That's my portfolio. I hope everyone enjoyed.